Extremely challenging market to trade today, one of our most challenging days in a while. Minus 55.25 in the 200K, minus 1380 in the 50K. Kind of a capitulation as far as chop. We don't struggle as much with up or down markets, but when markets are choppy and the markets just become extremely choppy, a lot of these moves just feel like stop running moves. Every time we get in, it reverses, and then we get long and it goes down, and we get short and it goes up. And so just a lot of back and forth, and that's normal. Markets do that. Markets stop run. Markets are choppy, but it's an extended period of chop, more than normal, and we hit a worst-case drawdown today, and I want to show you that as well on the portfolio calculator. And this is one of the reasons why we start in a drawdown. We gave a drawdown alert the other day, and here is the portfolio coming into today. This is not inclusive of today's results. Today's results are roughly down 13K, 13.6K on the per E-mini. And so that's minus 30, that would put us at minus 32K, somewhere in there. So our max drawdown now is 32K. I'll have the final results later on. This is what I have through yesterday. And so it takes me a while to update this, and I haven't done it yet. The market is still actually open in the after hours until 5 o'clock p.m. Eastern Standard Time. And sometimes you can see what happens. Right here, for example, you get a worst-case drawdown. I want to show you that with the pen. And you get this worst-case drawdown right here was worse than this worst-case drawdown. And so you get a worst-case drawdown. So we anticipate that over time, as volatility increases, we'll get worst-case drawdowns. And so that's why we want to start in a drawdown. That's why we don't want to use this worst-case drawdown specifically as a stop loss. You can do that, but oftentimes capitulation, you get these drawdowns, and then you get a bounce. And so this market could continue to be challenging, and it could go lower, but we're giving it a little bit of room to bounce here. You could actually increase the number of contracts you're trading here for a run-up, but this market is just really, really hard to trade right now. It should go lower, but it's not. The Fed balance sheet, the liquidity is there, and it just supports it. It just, every time the market sells off, it just bounces right back. I want to show you that on the chart as well. So that is where we are on the drawdown curve. We are down here at the 32K range. So we anticipate that. That's where we start on the drawdown, and we're looking for a bounce. And so you have to manage risk right here. And so you could stop trading, you could trade less, you could trade the same, you could trade more. And I'm staying the same right now. If there is an opportunity to increase tomorrow, and you know, the market, it tends to go up easier than it goes down. So if the market is down intraday tomorrow and then the trend starts to solidify to the upside and we're still down, I could add intraday a little bit of risk to that if I perceive a bounce back. The market should go down, it could go down, and tomorrow's FOMC decision, no one knows the answer. It could be anything, and the market could tank, it could rally. It feels like a balled up market that wants to bounce here. And so if the FOMC meeting tomorrow is everything the market expects, it could bounce really hard. If it's the slightest bit dovish or perceived as dovish, it could bounce. If it's more hawkish than expected, it could tank. And so I want to go over the trades on the day. We had the EVP1 trade here. This one is up on the day, actually, and so this is a profitable trade. This is a nice trade. We had that yesterday, and now we've seen 4 days in a row where the market has bounced. Let's look at, I want to look at the market in general, though, based on what I was just previously saying, and we'll look at it on AT2022 because it's a 50-minute chart. We had this gap down on CPI last Tuesday. Market sold off, so we got a little bit of that trend. It would have been nice to have the whole trend, but most of our systems are day trade, and so we had a little bit of an equity peak here on this day. The market has not done much since then. So if you take a line at the close, it's traded on both sides of that. Here is last Friday's trade, Monday, Tuesday. Actually 4 gap down days in a row. Lots of weak market internals, but it's not selling off. The fundamentals are bearish. The technicals are bearish. The sentiment is bearish, but it's not selling off. We're getting gap downs, and then we're getting rallies at the open, and then we're getting rallies at the close. And so you see the rally at the close here the last 5 days. Here's a rally, here's a rally, here's a rally, here's a rally, here's a rally. So it acts like a market, and I've seen these markets take back all those losses. And so I wouldn't be surprised to see the market rally up here into the end of the week. I wouldn't be surprised to see it take out the June lows at the end of the week. And so it's anyone's guess. It could trend. It is bottled up. It is extremely bottled up, so it could trend. We are long at the end of the day with 60-minute breakout, holding this again overnight. So EVP1 was profitable today. 60-minute breakout, stopped out, got back in, and it is up on this trade, holding position overnight. Gap continuation 2019. The market seems to have our number on. This is one of our top strategies, by the way, that does really well. But on the short side, it seems to have our number on these gap continuation 2019 shorts. It seems to really love to bounce on this signal lately. And it makes no sense to me, this market. The fundamentals are very bearish. The true value is much lower in my opinion. But the market can't reprice because the Fed's balance sheet really won't let it. And so we have to trade it either way. We have to trade manipulated markets. We have to trade markets that are manipulated by the market makers, by the Fed. And it'd be nice if we could get rid of the manipulation and trade free and fair markets. But in reality, those don't exist. And it's frustrating that they don't in this day and time. So we have to trade it either way, whether they're manipulated or not. And so gap continuation 2022 stopped out on the day. Tick reversal, stopped out on the long side and exited on a short trade. So this is one of our top strategies that had an equity peak last week. Tick Pulse, first trade was stopped out. Second trade exited with a little bit of a profit. Tick Wave, same thing, got short and then stopped out, got short again, and it's just like trying to hold a ball underwater in a bear market. It's unusual. In this case, the Fed, this is typically what you see, hard to short market. When the Fed is accommodative, you don't usually see this when the Fed is tightening. So the truth is they're not really tightening yet. The balance sheet is still high, interest rates are still low, and maybe more tightening tomorrow will increase the ability to go short this market, or maybe they'll just be dovish and the market will rally. I think it depends now at this point more on the balance sheet than the interest rates. Overlap in Q, small loss on the day, momentum reversal, got long here. This has been a good strategy for us lately with the last 2 days down. VTNQ had a nice trade. So EVP1 and VTNQ had a nice day. Parabolic VSD stopped out, got short here. So just a rough trading day, difficult, challenging market to navigate, and difficult time really in markets in general for investments in stocks or bonds or commodities. A lot of these prices are hard to navigate. We have geopolitical risk with Russia shooting nuclear weapons 300 yards, I guess, away from a Ukrainian nuclear power plant, and the Fed's policy doing what it's doing, and energy prices doing what they do, and so bonds continue to move higher, interest rates move higher while bonds continue to move lower. Cobra 3 was profitable on the short side, momentum reversal. ES stopped out on the first trade, got back in, was profitable on the second trade, down on the day. 60-minute breakout short, got short, reversed along, stopped out, got short, reversed along, and it's still long. And so 60-minute breakout is on the ES is long as we go in tomorrow, as well as 60-minute breakout in Q. The FOMC will be at 2 p.m. Eastern Standard Time tomorrow. Looking forward to getting this meeting and the press conference past us and seeing if we can get a more clear picture for the markets to trade on instead of this extreme range-bound chop. And you can see it here on a 15-minute chart of the S&P. Here is the CPI, and you see the following day choppy. That was Wednesday, Thursday, Friday this week. You can just draw a line right here and just see random price action all over the place, barely lower than the CPI, and the market is right below 3,900, and it took out that support, traded above it yesterday, traded below it today, and so it's not like old support became new resistance because it traded above it yesterday. So just challenging markets to trade, and that is where we are in the portfolio. portfolio calculator and the daily results for Tuesday, September the 20th, going into FOMC tomorrow.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.